Hello everybody. Hope you all are doing really well. Please confirm me on the chat box if I'm audible and visible clearly or not. Please confirm me on the chat box if I'm audible and visible clearly or not so that we can quickly start with the session. In the meantime, I'll just connect the iPad so that we can quickly start with the session. Yes. Hello everybody. Hope you all are doing. Yes, I can also see here that I'm clearly audible and visible. Very good afternoon. Hope you all are doing really well. Yes. Very good afternoon. Very good afternoon. Please confirm me on the chat box if I'm audible and visible clearly so that we can quickly start with this session. Yes. Very good evening. Very good evening. Perfect. Thank you so much. Thank you so much. So very good evening everybody. Hope you all are doing really well. This is CA Supreet Agrawal, your faculty for ACCA, AA, AAA and law subjects. And my dear friends, today is a very special session because today we are going to solve the questions of two chapters today. So we are going to try to maintain the speed and we are going to ensure that you all understand really well as well. But what I want is that you should be connected throughout the session. You should try to understand everything, and that's how we will be completing the chapter number 15 and chapter number 16 today. My dear friends, if you look at this particular table, you can understand that we have already completed the question solving sessions from chapter number 1 to chapter number 14 till now, right? And today we are going to connect to discuss about chapter number 15 and chapter number 16, which is audit evidence and analytical procedures. Now my dear friends, I would assume here that you all already have a thorough understanding of these particular chapters and we are only here to solve the questions. So let's jump to the question number 1, which is on page number 114. Okay, 114. Yes, page number 114. This is chapter number 15, audit evidences. Okay, so now if you face any trouble, do let me know on the chat box. After completing each question, we will be opening the chat box for a few minutes, and that's how we will be completing the chapter today. So now let's discuss on this particular question, which is New Thorpe Company. Before starting with this session, I want you to have a pen and paper or a notepad in front of you so that you can understand everything. You can note down the important pointers as well, because this particular question solving session is going to be conducted in the live mode, and that essentially means that we are going to have an interaction also. You are supposed to write your answers also. So let's just understand this first. It is 1st July 2025. Is it the year end, year beginning? It's not mentioned anywhere, but as of now we are not informed about the year end. Okay, now for the year ended 30th September 2025, we are auditing. So this is not the year end. After April, there has been May, there has been June, and then there is 1st July. So this gap is there, right? This gap is there of 2 months. Okay. Now in March 2025, that is 1 month before the year end, the board decided to close one of the company's factories on 30th April 2025. Okay, so on 30th April, that is the year end, they have decided that they will be closing down one of the factories of the company. Okay, so year end. Now a full physical inventory count was carried on at 30th April 2025, which is again the year end, and audit test confirmed that the counts were accurate and there were no purchases or sales cut off errors. So everything is booked in the appropriate year only, appropriate accounting period only. In June 2025, as in April, so just May's gap is there, and you decided that in respect of the factory closure, some of the plant and machinery has been sold, most of the inventory has been sold, all employees have either been made redundant or transferred to another factory. The company has provided you with a schedule of the closure cost, the recoverable amounts of the plant and equipment, and net realizable value of the inventory and the redundancy cost as well. Details of the plant and equipment are maintained in a non-current assets register. Okay, also. Now match each of the following procedures on plant and equipment to the appropriate assertion. So you are already aware about the assertions: the existence, occurrence, valuation, measurement, rights and obligations, accuracy, cutoff, presentation and disclosure, all of that. So they will be telling us about the procedure and we have to map it to the relevant assertions. Number 1. Inspect plant and equipment at the factory at the reporting date. Inspect plant and equipment at the factory at the reporting date. What do you think it is? Inspect plant and equipment at the factory at the reporting date. What do you think it is? Yes, what do you think it is? Tell me. There are four options available. Tell me. Yes, tell me. Tell me. Inspect plant and equipment at the reporting date. Inspect plant and equipment at the reporting date. So this is inspection. Okay, inspection procedure. At the reporting date, they are inspecting. So what they are trying to check? They are trying to check rights. No document, no title deeds are checked. Completeness, maybe not, but it's not just physical verification, it's inspection also. Accuracy and valuation, no. So this is what? This is existence. This is what? This is existence. Second point, review repairs and maintenance expenditure accounts for asset expenditure. Review repairs and maintenance expenditure. What you have to do? You have to review what? Repairs and maintenance expenditures, which is accounted for as asset expenditure. Okay, so whether repairs and maintenance has been accounted for as asset expenditure or not. So what you are trying to check here? Are you trying to check the rights? Are you trying to check the accuracy? Are you trying to check what? Are you trying to check what? What are you trying to check over here? What are you trying to check over here? So you are trying to check the completeness part. You are trying to check what? You are trying to check the completeness part. Now, for disposals, agree proceeds. For disposals, agree proceeds to. Do you have anything to write on the chat box? I would be happy to check it also. Yes, do let me know. So for disposals, agree proceeds to sales invoices and receipts in the bank ledger account. Tell me your answer. For disposals, agree proceeds to sales invoices and receipts in the bank ledger account. Write your answer on the paper or the notepad that you have taken. Yes. For disposals, agree proceeds to sales invoices and receipts in the bank ledger account. So whatever you have sold, you have to agree that whatever is the proceeds, you have to check whether it is matching to the sales invoice and whether the same amount is mentioned on the ledger also, as in the same amount has been received or not. Yes, tell me. Tell me. So that is accuracy and valuation. That is what? Accuracy and valuation. Now, examine purchase invoices for evidence of ownership of material items of plant and equipment. Examine purchase invoices for evidence of ownership of material items of plant and equipment. You have to examine what? Purchase invoices. That whether you have the ownership or not. Then this is what? 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 This is rights. This is what? This is rights. Now tell me how many did you mark as correct? How many did you mark as correct? Tell me. How many did you mark as correct? Yes. How many did you mark as correct? Let me know on the chat box. How many did you mark as correct? 3. Okay. That's good. 3 is also a good score. 3 is also a good score. Okay. Good. Out of 4 you have marked 3 correct. Amazing. 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 Okay, now let's solve this one. Which 3 of the following audit procedures are appropriate to verify management's estimate of the realizable value of inventory? Which 3 of the following audit procedures are appropriate to verify management's estimate of the realizable value of inventory? Management's estimate. What you are trying to check? Let's understand first. Are appropriate to verify what? Management's estimate of the realizable value. That is whatever estimate they have given us, whatever accounting estimate they have given us, that this should be the value, that should be the realizable value of the inventory. We have to verify that. So what 3 procedures? 3 procedures are correct for that. Yes. What 3 procedures are correct for that? So this is purely looking towards the valuation, right? Whether the valuation is appropriate or not. Yes. So this is purely looking towards the valuation part. Yes. Tell me. Yes. So this is purely looking towards what? Towards the valuation part. So yes, tell me. Okay, let's see option by option. Okay, you must remember this particular trick, that you should not just look for the right option. You should read all the options. You should evaluate which one is the right one, which one is the wrong one. So trace a sample of goods received notes and goods dispatch notes from before and after the year to inventory records. Now this will not tell you about the realizable value. This might help you count the quantity but not the realizable value. So this is not correct. Now inspect this inventory records for evidence of obsolete or slow moving inventory. Inspect the inventory records for evidence of obsolete or slow moving inventory. Now will this have impact over the net realizable value? Yes. So this should be, I'm not saying this is, but this should be one procedure, okay, that we should select. Now for inventory that has been sold, agree proceeds to sale invoices. For inventory that has been sold, already sold, agree proceeds to sale invoices and bank ledger account. That is, whatever has been sold already, whether the amount at which it has been sold in the invoice and whether what we have received in the bank, whether that matches or not. This should also be selected. Okay. Now third one, confirm the reasonableness of the basis on which production overheads are allocated to inventory. Confirm the reasonableness of the basis. Confirm what? Confirm the reasonableness of the basis on which production overheads are allocated to inventory. Reasonableness of the basis on which production overheads are allocated to inventory. Now this will help you evaluate the cost but not the realizable value. So this should also be cut. Now let's see option E. This should be selected because this is the only option and we still have to select one more option. But let's see, what if sir this is also something that needs to be cut? Then we might have made certain error. We have to reevaluate. Analytical procedures on advertising and delivery cost are other estimated cost of sales. Analytical procedures on advertising and delivery cost and the estimated cost of sales. So this is also having impact on the net realizable value. That is why we should select this. So what we should select? B, C and E. B, C and E. I hope this is clear. Yes. If there is any challenge, do let me know in the chat box. If there is any challenge, do let me know in the chat box. Yes, if there's any challenge, do let me know in the chat box. B, C. Okay, you have not selected the third option. That's wrong. You should have selected the third option also. Yes, that's where you have made the mistake. Did you understand this mistake? Yes, did you understand this mistake? Tell me. Correct. Very good, very good. Okay, now let's go for question number 3. Let's go for question number 3. Which of the following audit procedures is not appropriate for testing the estimate of the redundancy cost? Which of the following audit procedures is not appropriate? Not appropriate. Mind this word. Okay, not appropriate for testing the estimate of the redundancy cost. Okay, so develop an independent estimate and compare with management's estimate. Okay, that could be one. Develop an independent estimate and compare with the management's estimate. That could be one appropriate procedure. Compare management's estimate with redundancy payments made in prior periods. So this redundancy cost and the last redundancy cost could be different and we have to select one option. So this could be one option. Now compare redundancy payments made after the year end with management's estimate. Now this will only give us data about those redundancy cost that has been paid, but still this is a valid procedure. Okay, so this should not be selected. Evaluate the reasonableness of the assumptions used by management to calculate the estimate. This is also perfect procedure. So what we should do is we should select option number B. What we should do? We should select option number B. Hope this is clear. We should select option number B. Hope this is clear. Yes. Now jump on to the fourth question. Jump on to what? The fourth question. Okay. Which two of the following? Which two of the following? Yes, I can read your chats. Understood? Perfect. 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 Okay. Now, which two of the following audit procedure would help to determine whether management has identified all accounting estimate that could be material to the financial statements, whether they have identified all accounting estimates or not. So inquire about the existence of any subsequent events. That is also important. We have discussed it in one of the questions earlier also, that when we talk about the provisions, what happens is provision, in case of provisions, the best way of checking whether the provision was made appropriate or not is to check the subsequent status of it. So this might give you one idea. Okay. Review communications with lawyers for information about litigation. This will also be very important, that you check the status after the year end also with the lawyers if you are about to win or not. then thereby you can decide whether it is a contingent liability or a provision. Then confirm inventory held by third parties. Now this will give you data or information on the existence but not on the valuation or accounting estimate, so this should not be the correct option. Determine whether accounting estimates derive from historical patterns. So now what difference will it make on the completeness part, even if you check that whether they deviate from historical patterns or not. So this is not correct. A and B should be the correct options. Do you understand this? Yes, do you understand this? Please tell me, do you understand this? Do you understand this? Perfect. We have suggested answers available over here as well. Once we finalize all of our answers, we will be matching it here as well. Don't worry. Yes. Now, which three of the following are factors that would increase the degree of estimation uncertainty associated with an accounting estimate? Okay, very important question, very important question. Yes, anything to say over here? Please answer. Which three of the following are factors that would increase, that would increase the degree of estimation uncertainty associated with an accounting estimate? That will increase, that will increase the estimation uncertainty. There are 6 options available. Select any 3 that will increase. Please try to consider this word. That will increase. Yes. Tell me. Yes, so I have 3 devices connected over here, just so that I do not miss your chats. I am updated about the quality of the stream as well, and there's no delay as well. Yes, tell me. Tell me your answer. This is like a direct question, although it seems a little difficult, and a lot of students makes this mistake in this particular question. But you have to be very calm while understanding the answer of this particular question, and you will get through. Don't worry. Tell me. B, E, and F. B, E, and F. Okay. Let's see all the options. The existence of recognized measurement techniques. No, that will not increase. That will decrease. Unobservable inputs. Yes, that will increase. Okay. A short focus period. That does not make any difference. The auditor's professional judgment. That will not increase. Okay, so we are left with B, E, and F only, but let's check. Sensitivity to changes in assumptions. Yes, that will increase. And known management bias also. Yes. We already know the meaning of these words in our concept lectures, right? We have already covered it. So yes, B, E, and F. Let's check now. Existence, completeness, accuracy, rights. Existence, completeness, accuracy, rights. Perfect answer. Second one is B, C, and E. B, C, and E. Perfect answer. Okay. Third one is B. Okay, perfect. Okay. Yes. Fourth one is A and B. Fourth one is A and B. Perfect. And fifth one is B, E, and F. B, E, and F. Correct. Perfect. Amazing. Very good. Very good. Now, let's come to the second question. Let's come to the second question for today. Okay. Okay. Hope this is clear. Okay. Now let's come to the second question. This scenario, so you will be getting 10 minutes to draft your answers for this question. Do not worry about it. You will be getting 10 minutes. This scenario relates to 3 requirements. ISA 315 revised 2019 identify and assessing the risk of material misestimate. See, this is the beauty of the AA paper here. You will not be required to mug up the points, the ISA numbers, the ISA names. Defines assertions as the representations made by management, explicit or otherwise, regarding the recognition, measurement, presentation, disclosure of information in the financial statements. Okay. Auditors may use two categories of assertions to form a basis for risk assessment and the design and performance of further audit procedure. For example, classes of transactions and account balances. Okay. One assertion applicable to both categories is completeness, that all transactions, events, assets, liabilities, equity, interest that should have been recorded or not, and all related disclosures that should have been included in the financial statements have been included or not. Requirement: list and describe 6 assertions other than completeness used by auditors. Okay, so you have to list and describe. List as in you need to name down only, but describe as in 1 to 2 lines about each one of them. Okay, if possible with a slight example also, that will add to your marks, and that will reduce the cutting of marks in your case. Okay, now second part is Boulder company is a small company that manufactures. Okay, let's do one thing. Let's complete this part, then we will be going for the next part. Okay, so that we have little breaks only and you are able to complete it also. So list and describe 6 assertions. Okay, you get 5 minutes for this one. Okay, because the 5 minutes are for the other one. So 5 minutes for this one. Draft your answer. Okay, and then let me know. Do not write completely, but list down and one liner explanation with it, if possible, one examples also for each. Just 5 minutes. Okay, and then we will be coming back, we will be discussing this particular answer, and then we will be moving forward. So that's how we will be doing, just 5 minutes. Okay, thank you. Yes, I hope it's done. Yes, Jaldi. Yes, please let me know if it's done. Please let me know if it's done. I hope it's done. Please let me know if it's done. Existence, existence and occurrence, measurement and valuation, rights and obligation, presentation and disclosure, accuracy, cutoff. Did you write it? Yes. So see, existence, cutoff, occurrence, accuracy, valuation, allocation, rights and obligations, classification, presentation and disclosure. I hope you must have written it. Good. Now let's go to the second part. Okay. Boulder Company. Boulder Company is a small company that manufactures hosiery products. It employs approximately 150 staff, all of whom are paid by bank transfer. Okay. So one point to be noted, 150 staff. Temporary factory staff are hired through an agency and are paid on piece rates. That is for the number of items that they produce. Okay, temporary staff on a weekly basis. Supervisors at Boulder Company authorize documentation indicating the number of items produced or processed by agency staff. The agency is paid by bank transfer and it, not Boulder Company, is responsible for the deduction of tax and social insurance. Okay. Permanent factory staff are paid weekly based on hours worked as evidenced by clock cards. Okay. So permanent employees are paid in the hourly manner, whereas temporary staff are paid in the piece rate. Okay. Now, administration and sales staff are paid a monthly salary, of course. The two directors of the company are also paid a monthly salary. Okay. Sales staff are paid a quarterly bonus based on sales. Directors are paid an annual bonus based on profits. Oh my God, so many things are there. Let's write it. Let's summarize it. Okay. Number one is temporary staff. So this is paid on what? Piece basis. Okay. Then there is permanent staff who are paid on hours basis. They all are paid on weekly basis only, but hours basis. Okay. Then this is week, this is week. Okay. Then there are administration and sales staff. They are paid monthly salary. Monthly salary. They are paid what? Monthly salary. Okay. Then directors are there who are paid again monthly salary. Okay. Then sales staff are paid a quarterly bonus based on sales. Directors are paid an annual bonus. So here they get quarterly bonus also. Quarterly bonus, and they are getting annual bonus based on profits. Okay. Now describe the substantive procedures the auditor should perform to obtain sufficient and appropriate audit evidences in relation to the payroll balances in the statement of financial position of Boulder Company. Okay. And then the payroll expense in the statement of profit and loss. So payroll balances also, payroll expenses also. So they are talking about balance sheet item also, profit and loss item also. Okay. So this is of 8 marks, balance sheet item and profit and loss of 6 marks. Okay. Please take 5 minutes, draft your answers, not complete answer. I'm not saying that in 5 minutes you type the complete answer. Just mention your key pointers that you would be writing, and once it's done, do let me know. I am giving you time up to for 6 minutes. Okay. So it's 16:24. Let's meet at 16:30 and discuss about this particular answer. Yes. Yes guys, hope it's done. Hope it's done. Okay, so now let's discuss about what could be certain procedures that you can write over here. Okay, what you should write is you should write ideally 6 to 8 procedures for first part and ideally 5 to 6 procedures for the second part. Now when we talk about the first part, I'm just giving you one idea over here what you can write is, see, what is more important to understand is that everything that you write over here should answer the assertions that are there for the balance sheet or for a statement of financial position. Okay, and number two thing is that you should apply those procedures only that will be catering towards the balance sheet items. For example, if I ask you to inspect something, what you will be inspecting, that as part of the employment agreement, what all provisions needs to be made over here for the payroll balances. Say, is there any particular provision that needs to be created for insurance cost, for any of the gratuity cost, for any of the group insurance, everything. So you have to take into account that. Okay, second thing that is very important is that you should try the average cost, as in you should recalculate what average cost, as in what is the total cost, what is the average cost, how do you need to manage the average cost of the company, and is there any particular provision, particular investment that needs to be done. Then what you should ideally do is, after you have done the provisioning testing, after you have done the average cost testing, you should do the subsequent testing, that whatever provisions have been done, whether they have actually been paid or not, subsequent testing should be done. You should obtain the results of test of controls also, right? All of that should be done very thoroughly over here. Now when we talk about the payroll expense, what is more important to understand here is payroll expense. In case of payroll expense, what is very important for us to understand over here is that you should check the agreement and you should check whether all the cost, whether the complete cost have been taken into account or not, all the costs are covered or not. Okay, then second thing is, what you should do is you should ideally check that whether there is a sync between employee headcount, sorry, employee headcount and sales register. That is, if there are 15 active employees, so whether the salary has been paid for 15 employees only or not, right? That is very important. After that, you should check whether the relevant contributions are deducted or not, say PF contributions or other contributions. Like so, this is how you need to write your answers. I hope you have completed it. Now let's try to read over here what all points are mentioned over here. Okay, so okay, all amounts can be traced to supporting schedules or not. Okay, one point. The second point for the balance sheet item is that payable balances at the year end to any payments made after the year end. Yes, we have written this also. Then extent of testing noted below will depend on the results of the test of controls also. That is something also that we have noted. Perform analytical procedures on the amounts payable at the period end by reference to the number of employees also, right? That is also very important. But you know why I'm not throwing much light on this? Because when we will be going from chapter number 22 to chapter number 27, we will be discussing about in detail about the audit procedures, how you need to draft your procedure. There I'll teach you one trick, that how you need to merge the types of audit procedures to the relevant assertions also, and that then you will be able to write much better answers for this. Now unpaid amounts due to agency, so confirm with the agency the amount payable to the agency at the year end. If there is any provisioning required for bonus also, that also you need to write. Okay, weekly payments are done, so if there is no weekend at the year end, then there would be some accrual, all of that. Then unpaid wages and salaries due to permanent factory staff, administrative, sales should be recorded. Okay, unpaid amounts due to tax authorities and tax and social insurance, this is something that we have covered. Now payroll expense in the statement of profit and loss account, see they have also written 7 points. Now payroll expense in the statement of profit and loss account, so do we need to write the similar pointers like in this much detail only? No, it is not at all required. You do not need to worry about it. Okay, now payroll expense in the statement of profit or loss, so agree the expense in the statement of profit and loss to a supporting schedule, like we have checked. This supporting schedule could be the employee masters also. Agree the makeup of the schedule to the monthly payroll and agency invoices, that whether whatever we are paying, that is only coming into our ledger or not, whether we are paying in full or not. Select a sample of payroll transaction and trace them to source documentation also. Agree a sample of items on agency invoices to documentation authorized by the supervisor. Yes, so whether they are approved or not. So do we need to write the similar pointers? No, you do not need to write the similar pointers. That is very important. So can we write in our own language also? Yes, you can write it in your own language also. What if our procedures and their procedures are different? That also works, but your procedure should also make sense as far as the audit procedures are concerned. Otherwise, it is fine. Now, trace a sample of transactions in the opposite direction to the schedule supporting the expense in the statement profit and loss account. What is this? What is this? This is clock card hours to payroll. See, as of now, what we have done is we have tested through payroll. We have selected one sample from payroll and we have checked whether that is being made as per the clock card. Now we will be doing something else, which is we will be taking one sample of the clock card, that is the timeline, the attendance sheet, and we will be checking whether for that particular attendance the payment has been done as per the attendance or there is any difference in that. Then perform analytical procedures on the monthly expense for each category of employee with reference to the production and sales levels also. That is whatever calculations has been done. Say we have said one piece will fetch $10 and there are 100 pieces that have been created. So whether the total amount paid is $1,000 or not. In such a way, you have to check it. Plus, you also have to check the arithmetical accuracy of the bonus amounts also. With this, we have completed this particular question. This was a very good question. Okay. Now, done. Now, question number 3 is your homework. You should solve it yourself. Just in case if you face any trouble here, do let me know. I would be happy to help you here, my dear friends. Now let's come to question number 4 for today. Okay, this is the last question also. This is the last question also. Okay. Now, you are the auditors of Beer's World. Last question for today, as in from this chapter. Then we will be jumping on to the next chapter after taking a 2 minutes break. Now, Beer's World Company. You are the auditor of Beer's World Company, which manufactures and sells smart cuddly toys by mail order. The company is managed by Mr. Kaito and 2 assistants. Okay. So this manufactures and sells small cuddly toys. Okay. Now, Mr. Kaito authorizes important transactions such as wages and large orders. One assistant maintains a list of individual suppliers, orders, inventory, and pays suppliers, and the other assistant receives customer orders and dispatches cuddly toys. Due to other business commitments, Mr. Kaito only visits the office once per week. Okay. Now, at any time, about 100 different types of cuddly toys are available for sale. All sales are made in cash with order. There are no receivables. Okay. Now, customers pay using credit cards and occasionally by sending cash. Revenue exceeds $5.2 million. Wow. You are planning the audit of Beer's World and are considering using some of the procedures for obtaining audit evidences. So, such as follows: the analytical procedure, inquiry, inspection, observation, recalculation. Required, you have to draft the procedure for each of the above procedure, explain its use in obtaining evidence. Okay. So, what is the use of this particular procedure? Not from this case study, in general. Then describe one example for the audit of Beer's. So, first of all, for all these points, explain importance of this procedure. Okay. Then one example for all these procedures. Then discuss the suitability of each procedure for Beer's World, explaining the limitations of each. Then limitations. That is how you need to draft your answer. This question is for 5, 5 and 10 marks. Okay, that is how you need to draft your answer. Please take 5 minutes. For all these 5 pointers, you have to write each one of them. And once it is done, do let me know that it's done. So it's 16:39. Let's meet at 16:45. 5 to 6 minutes should be sufficient to draft your answers for this. Yes. So let's meet at 16:45. Okay, I hope it's done. So when we talk about each one of them, let me give you a certain idea about it. When we talk about the importance of, say, analytical procedure, let's discuss about the importance of each one, then example of each one, then limitations of each one. When we talk about the importance of analytical procedure, so it helps you evaluate the relationships, the plausible relationship between financial and non-financial data also. This is one such procedure that can only do so. There is no other procedure that can do so. Then when we talk about inquiry, then when we talk about inquiry, what is more important to understand here is inquiry is one such procedure that could tell you about the intention of the management, that could actually be a very fast paced procedures to obtain the evidences as well. When we talk about the inspection, inspection helps you verify something tangible, that is if say in management, if in inquiry management is saying that we have planned to increase our production by say 100% in the upcoming year, but inspection would demand the board resolution regarding it. So it helps you verify something tangible regarding it. When we talk about observation, observation helps us understand whether whatever has been written in the procedure, whether at ground level also that is happening at the appropriate level only or not. Then recalculation, when we talk about recalculation, what is more important to understand here is in case of recalculation, that is the only procedure that gives you the mathematical accuracy evidence about any particular item, that whether the mathematical accuracy is appropriate or not. When we talk about the examples, so in case of examples of analytical procedure, what is more important to understand is when we talk about the examples of analytical procedure, when we talk about the examples of analytical procedure, one such very important point in case of analytical procedure is that we can review the monthly data, monthly sales data also. When we talk about the inquiry procedure, what you can do is you can actually ask Mr. Kaito that if he visits the office only once per week, how does he ensure that every other procedure is being operated appropriately or not. There are very few employees available over here based on the revenue also, so that will also be a point of inquiry. Inspection, when we talk about the inspection, you can verify the approved supplier list also, you can check whether there is any orders placed from other suppliers. Then observation, you can actually observe whether this particular assistant, these particular two assistants are working their jobs appropriately or not. Then recalculation, what you can do is you can recalculate the amount of revenue from the per transaction. You can recalculate, you can take some sample and you can recalculate. When we talk about limitations, so limitations, when we talk about limitation in case of analytical procedure, what is more important to understand is in case of analytical procedure, what could happen is you might be looking at two data, one say financial, one say non-financial, but there might be certain pointers where there was no particular relation, but you have derived the relation. For example, there was no particular relation between the packing boxes and the number of units sold, because even a small unit will require some packing box, and say that is a standard box. So that might not be a very relational diagram of the packing cost versus the number of units sold. But even if 4 units are sold together, the same box, even if 2 units are sold together, the same box, even if single unit is sold, the same packing box, so that might result into lesser accuracy of this particular data. In case of inquiry, the management might not have the intention to tell you the 100% honest things. In case of inspection, what might happen is that you are verifying the document, but there might not be a complete data set regarding it. When we talk about observation, so they might behave differently when you are around, but when you are not around, they might not be behaving the same. Recalculation could only give you the substance about whether the accuracy is there or not, whether the mathematical accuracy is there or not, but not anything after that. Right, so this is very, very important. Okay, so this is very, very important. Now let's go and read it. So see, the definitions of analytical procedures are there. The definition of analytical procedure: inquiry, inspection, observation, recalculations are there. Suitability: analytical procedure, this will be useful because it will help to identify unusual changes. Then when we talk about inquiry, so this will be useful in the audit of BS Limited, especially where this is derived from third parties, so third parties inventory. Inspection: all purchase invoices should be addressed to BS World and relate to purchase expect. Then observation may be useful because it will show how the assistants verify documents. Recalculation, very useful for checking additions on invoices, etc. Now when we talk about the limitations, so it will not detect errors or omissions made consistently year on year, because inadequate procedure will show the consistent diagram. Then inquiry, So external inquiry evidence will be less useful in the audit of sales and receivables because goods are paid for prior to dispatch. So there are no receivables also because it is purely cash. In case of inspection, the fact that an invoice is addressed to the company does not confirm completeness of recording, right? In case of observation test will be limited useful because the assistants may act differently when an auditor is present. Then recalculation, the main limitation of recalculation checking is that calculations can only be carried out on figures that have been recorded. So this is something through which we have completed chapter number 15. Now when we talk about chapter number 16, we will be taking a 2 minutes break over here, but after this there are 1 and there are 2. I think there are only 2 questions available over here, right? So what we will be doing is we will be solving the question number 1 and then question number 2 is going to be your homework. You please solve it, and just in case if you face any trouble, please feel free to let me know. The name of the chapter is Analytical Procedure. We have in detail discussed about what are analytical procedure, the relationship, the plausible relationship between financial and non-financial data. So this is very interesting. Let's take a 2 minutes break, then we will be starting with this particular topic. We will be solving one question and then we will be closing out this session. So hope this session was helpful to you. Just in case if you have any questions, please feel free to let me know in the chat box, and if you like this session, do like this video as well and share it with other ACCA aspirants as well. Okay, so let's take a 2 minutes break over here. Yes, I hope this is a sufficient break. So let's come with a new energy for chapter number 16. When we talk about chapter number 16, this is analytical procedure. My dear friends, we are going to solve a very basic question over here because we will be solving the particular analytical procedure questions along with bigger questions as well, the planning chapters as well, the completion chapters as well. Okay, so let's take a very good question over here, which is repeated also at a lot of times. So analytical procedures are required to be performed as a risk assessment procedures. Ratios may indicate matters that have audit implications. Correct. Now give reasons for the following changes in ratios calculated at the planning stage of the audit. Planning stage. Okay. See, analytical procedures are performed at the planning stage, at the execution stage, at the final stage also. But here what we have to understand is that we have to give the details regarding the planning stage. So an increase in current ratio, what could happen? What could be the reason? A decrease in the gross profit margin, what could be the reason? An increase in the inventory holding period, what could be the reason? An increase in gearing also. Gearing as in relationship between equity and debt, just in case if you don't know it. Okay. So what we have to understand is we have to draft the reasons for it, the possible reasons for it. So there's no case study. No, there's no case study. There's only one question that is given over here, which is the detailed one, that how it could happen, what could be the possible reasons of it. So you have to use your FA, FR and SBR knowledge to write this particular answer. So don't worry about it. Take 2 to 3 minutes and draft your answers, just 1 to 2 pointers for each one of them, and then we will be moving forward to the next chapters in our next sessions also. So all the very best. Draft your answers and do let me know once it's done on the chat box, and mark it as done in the chat box. Then we will be going ahead and we will be discussing these questions and then reading the answers also. Yes. Okay, this is amazing. So I got certain charts over here. Let me read it. Okay, so sir, I am feeling hard substantive procedures. Can you guide me? Yes, definitely. See, we will be having one session, or I would say two sessions on audit procedures only. That is from chapter number 22 to chapter number 27, 28. We will be having two sessions, okay? And those two sessions would be fully dedicated towards strategy for the audit procedures, the question practice for the audit procedures, a little bit of answer writing in the session also. So what you have to understand is that this session, that is why I'm not throwing much light on this particularly here, because in case of this session, it is just one part. But in the another 2 sessions that we will be conducting, I think on Monday or Tuesday, the full dedication would be towards the audit procedures only. So that is going to be very, very amazing for you. Okay, so do subscribe to this channel, do share it with other ACC aspirants also who might be facing trouble in audit procedures. We will be conducting a session on the YouTube live only. Okay, now can be because of inventory overstated or overvalued. Okay, decrease in gross profit is reduced selling price or having increase in cost of goods sold. Okay, increase in inventory holding periods because obsolete inventory. Okay, perfect. Now let's discuss about it. Okay, let's have a quick discussion about it. When we talk about increase in the current ratio, see, the trick of writing what could be the impact, how it could be impacted, is to go through the formula. Okay, everybody studies this current ratio is current assets upon current liabilities, right? So this could be increased when the numerator would go up or when the denominator could go down, right? That could be 2 reasons. That increase in current ratio could happen when there is increase in the current assets in the form of increase in debtors, increase in inventory, increase in cash balances, and so on. Or there could be second reason, which is decrease in current liabilities. So it could happen when there's decrease in current liability, like decrease in trade payables, like decrease in provisioning, all of that. Okay, so that is very important. Now second, gross profit margin, what is it? It is GP upon sales, right? So decrease in gross profit could happen when there's either decrease or increase. There is increase in the sales with relevant increases with approximately same increases in the cost as well. The cost of goods sold goes up. Okay, all of that could be the reasons. Then, or there is increase in discounts also, that could be the reason. When we talk about inventory holding period, so this is what COGS upon average inventory. So what could happen? Increase. So it could increase when there is increase in the cost of goods sold without having increase in the average inventory. Or it could happen when the management is deciding to keep the inventories for longer period. So it could happen in that way. Increase in gearing, that is ratio of equity and debt. So in this particular case, when management has decided that they have to provide less money to the shareholders and they want to pay more in the fixed cost, then also it could happen. So those could be the reasons. Now, increase in current ratio may indicate increase in inventory, cash, receivables levels. Okay, then increase may also be due to decrease in trade payables or other current liabilities, like we discussed. Decrease in gross profit margin, cost of raw materials or bought in goods has increased, or that discounts or selling prices have decreased. This may be not be a concern, cause for concern, if the reason for this is an overall increase in revenue. Then increase in inventory holding period indicates that the number of days the company could continue to trade if supplies were to cease. The longer the period, the higher the level of inventory is held. But inventory holding also involves expenditure. Then an increase can indicate the company is unable to sell its inventory also. That could also be there. Many businesses are cyclical and increases and decreases are to be expected. Increase in capital gearing. So gearing is the relationship between equity and debt. A high level of gearing generally indicates that the company must service or pay fixed interest borrowings. This means that there is less available for shareholders, but it may also mean that the company is expanding because they want to keep the money with themselves and they want to grow further via leveraging, which means greater returns for shareholders in the future. A high gearing ratio may mean that there are doubts about the company's ability to continue as a going concern also, because they will be paying so much in the fixed cost, right? So with this, we have completed the questions from chapter number 15 and chapter number 16. I hope you like this video, and if you like this video, hit the like button, subscribe to this channel, and then we will be continuing again for further chapters in the same manner. And the recordings would also be available to all the paid students as well. Do not worry about it, but it will be on YouTube for a very short period of time. Otherwise, it will be vanished from here.